Hello, greetings, welcome to Dividend Blasters. This is our 90-second video, and the topic today is investing smartly in AI, Part 3B, the ETFs. So you recall the first video of the three-part series, we talked about the AI ecosystem and the different levels of the AI ecosystem, and there's 5 of them. And then in the subsequent video, we talked about the key players, the companies, the stocks that an investor could look at investing that engage across the AI ecosystem. Then we did video 3A or part 3A, where we talked about those ETFs that focus on hardware or the chip makers. And we also talked about those ETFs that have a broad based AI focus. This video, we're going to talk about an actively managed AI ETF. We're also going to talk about thematic AI ETFs, as well as mixed robotics and AI ETFs. So, quick disclaimer, I'm not your advisor. What I say should not be constituted as financial advice. This video is for information and education, reflects my own personal opinions, research, and experience as an independent investor for more than 30 years. So do your own due diligence, your own research, consult an advisor before making any major financial investment decisions. So, as I mentioned, we're going to talk about actively managed AI ETF. And there's one, and I'm going to read you the description and then we'll get more into it. But the description of an actively managed AI ETF uses active management, leveraging AI in the process. What does that mean? They're leveraging AI to do the stock selection or the holdings within the ETF. That's interesting. Another category that we're covering in this video, mixed. Actually, let's tackle thematic AI, and that focuses on specific AI themes. So the ETF may have a specific theme or thrust area of generative AI or robotics or automation, but there's a singular focus on a theme. Then the last category here is mixed robotics and AI. That's really a blend of, if you will, of various thematics. Could be robotics, could be AI, could be generative AI, could be automation, could be any of those things. All right. Here's our handy dandy little Venn diagram. We already talked about the broad category. That's actually going to be in video 3C, where we're going to talk a little bit about the tech ETFs that don't necessarily have an AI focus, but they have a technology focus and they invest in some AI stocks. And as I mentioned here, we're going to cover the lower two rings, the thematic AI and the mixed robotics and AI. And so we're looking at really 12 ETFs, 9 in thematic, 3 in mixed robotics. All right, let's move on. So first, we're going to do actively managed AI ETF, singular. There's just one here. This first one is managed by Amplify ETFs, and it is called the Amplify AI Powered Equity ETF, or AIEQ. They closed at about 42.5, and the expense ratio 0.75%, a little on the higher end. They pay a quarterly dividend, it says, but I don't see a rate or a yield. So here's another one I have to take an action item and look at, because this is the second one that I'm seeing that has no dividend. Sometimes what happens is the dividend is so modest and slight, it won't register when they do the calculation. But I want to talk a little bit more about this. This is an actively managed AI ETF. And what does that mean? And I got a description here. Amplify AI powered ETF stands out as an actively managed ETF. It leverages artificial intelligence for its investment process. Its holding selections process are AI driven. So they're actually they're investing in AI stocks, but they're also using AI to do the stock selection. That's interesting. All right. So let's actually just go back for a second. So I just want to mention that the assets under management are a little under 113 million. When you start to get into more of these niche categories of ETFs, This is not bad size-wise. But again, if you look at some of the more mainstream ETFs that we all know and love, these are small, but they're going to be small because they're very niche oriented. But this is not the smallest one out there. All right. So if you look at the total return year to date, it is outpacing the S&P 500. It's a little under 7.2%, which is more than the 5.92% of the S&P 500. But it's not exactly crushing it. So, to me, that's going to be a combination of the expense ratio that we saw was 0.75%. It's a little on the higher end. It's not the highest one out there, but it's a little on the higher end. And you'd have to look at some of the holdings. Well, they have Microsoft, which is doing good. It actually just crossed over $500 today per share. Has never done that before. But Nvidia, I would have to deduce that maybe the allocation in Nvidia is not quite as high. The AI stock selection process is being very risk averse, and it's diversifying in that 5 to 6% range for those top holdings. And it's got Apple in there, and I have not seen Apple in any of the ones that we've shown so far. So that's probably part of it. Amazon and Meta Platforms and Broadcom, those are all doing very well. Tesla's probably not helping, as we know, and I like Tesla. And then, interestingly, they have Bristol Myers Squibb, and I love that drug company, and it's a wonderful dividend stock. I'm kind of surprised to see it in here, but that's their AI selection process. All right, and so that's the sole ETF in that category, AI managed, actively managed AI ETFs. Now we're going to do thematic AI. So this one is the specific themes: robotics, automation, any of those particular areas. So first one is managed by Roundhill, and it's the Roundhill Generative AI Technology ETF, ticker symbol CHAT or chat. I'm very familiar with Roundhill. I have 3 of their weekly paying dividend ETFs. I like them. I like getting that weekly dividend. But anyway, that's another video altogether. They closed a little more than $48 a share. They have an expense ratio of 0.75%, so it's a little bit higher. Assets under management, a little under $334 million. Seeking Alpha's quant score is a buy, so it's green. The analysts, they're lukewarm on it. They're giving it a hold or a yellow rating. So if you look at that, return, 20.5%, it's killing it year to date. More than 3 times outpacing the S&P 500. It's absolutely crushing it. I do like to see that. And, look at their top holdings: NVIDIA, Alphabet Class A, Oracle, Microsoft, Palantir, which has been on a freaking tear. And I have a few hundred shares of Palantir, and I'm glad I do. Arista Networks, we've heard a lot about that, but we haven't seen that here in any of the other holdings. So these guys seem to be doing a good job. Meta Platforms, what am I looking at? SoftBank Group, that's the Japanese banking company, then Tencent Holdings. So those are the top 10 holdings, chat. So again, I think the major takeaway here is that year-to-date return of 20.54%. All right, let's go to the next one. Next one is by Global X, and it's ticker symbol BOTZ. Global X Robotics and Artificial Intelligence. That's very blended. And they closed at a little above $32 a share. Expense ratio 0.68%. Not an unreasonable. I have some covered call ETFs that are in that range. I have a few of the specialized ETFs that are a little above that because I think they're worth it. So these guys, they got to get paid. They're doing their job. They're taking their industry expertise and their technical expertise, and they're engaging in stock selection, and and you're getting a dividend on this one, 0.24% yield. And you get it twice a year. Dollarized is about 8 cents per share annually. Assets here are a little bigger, 2.73 billion. So in this subsector, I'm going to say this is a good size one, and I like that volume, 377,000. That's the average daily trading volume. The analyst rated a buy. The quant score rates it a hold. You will see a lot of these have a quant score of hold or yellow because they're getting a lot of people are buying them across a lot of these ETFs. They don't want to be left out. You ever hear of FOMO, fear of missing out? They don't want to miss out, and they're getting in there. Maybe they're just pricing these things up a little bit. So that's just a word to the wise. All right. So year to date, total return is actually not as good as the market. This is one of the lower ones I've seen, 2.88%. So, I have to wonder, why isn't the quant score a red? That's a sell. And that's something you might see. They have it as a hold, but I don't like that total return. It's less than the S&P 500. I can get a better total return in an index fund ETF like a VOO or a QQQM and pay a lower rate. But anyway, that's just something that I will mention to you. And you know what? If folks like it, that's fine. They can do that. Here are the holdings, heavier on NVIDIA. And then there's something called ABB Limited. And then Intuitive Surgical, which is a healthcare surgical company. So this is very blended. Keyence Corp, Fanuc Corp, Dynatrace, SMC. So some of these are a little bit out of what we know of mainstream. I'm very familiar with AeroVironment. There's been a lot of talk about AeroVironment and its future in what am I thinking? I'm sorry, I'm kind of blanking out here on drones. So anyway, and that's probably not the best term to use, but that's how I talk sometimes. Bear with me. All right, next one. VanEck. Well, you remember we talked about SMH in the previous video, which is a chip maker ETF. This is a little different one. This is VanEck Robotic ETF. They're focused on robotics and automation, and they closed a little under 46 bucks. Expense ratio very reasonable, 0.47%. And I've covered this in videos. What does that expense ratio mean? Every $10,000 you invest, you pay an annual administrative fee and management fee of about $47 for every 10,000 you invest. It does pay a dividend, one dividend annually, with a 2.47% yield. That's a nice yield for something that's highly technical and specific. It comes out about a $1.15 a share. The trading volume is a little bit on the lower side, but with some of these niche ETFs, it's bound to be expected. It's a smaller ETF. The assets under management less than 18 million. The analysts is seeking alpha haven't covered it. The quant score is a hold. The total return year to date, it's not bad. It's not the best, but it's not bad. It's double the market, which I at least like to see for something like this. So I think that's not bad. It's decent. So that's IBOT. And here are the key holdings: NVIDIA, Emerson Electric. Wow. Okay, that's an oldie. It's been around a while. So remember, this is robotics and automation. So they're going to invest in lots of different things. They're not necessarily going to be investing in chips. Autodesk, ABB, we saw that one other ETF. Keyence, Denso, Rockwell Automation. Okay, interesting. We have another one by BlackRock, iShares, and it's ARTI, and it's iShares Future AI Tech ETF. So they closed a little over 40 bucks, a little under $41 a share. They're really right near the top of their range. They have an expense ratio of 0.47%. They pay a dividend twice a year. It comes to about 7 cents or 0.17% yield. Assets under management, not bad, 1.1 billion. I'm not surprised. BlackRock, they can draw in the investors. They are huge on Wall Street, and they are a leader in the ETF industry. The analysts give it a buy rating is the quant score. And the total return, just an eyelash over 10.5%, almost double the S&P 500. It's not bad. It's not the best, but it's not bad. If you have an interest in robotics and automation, this might be the one for you. You can see the key holdings, and none of them are more than 5%. Vertiv Holdings and AMD, well, that's a chip maker. Broadcom, another chip maker. Supermicro, it's the dense server company that works closely with NVIDIA. Arista Networks, we talked about that. And then there's a few others there. Next one by First Trust, and it's the First Trust Index Innovative Transaction and Process ETF. So this, it's not a pure play. It's very blended. And the focus is on blockchain and AI. So that's the blend. And it's an interesting blend because blockchain is so important. If you invest in Bitcoin, as do I, you're very interested in this. Now, again, it's not a pure play on Bitcoin or blockchain or AI. It's a blend. So the ticker symbol is LEGR, and they closed a little under 53, a little over 53 and a half. Expense ratio 0.65%. There's a quarterly dividend there of 2.15% or $1.17. This is not bad assets under management. It's not clearly as big as the BlackRock ones we're seeing, but it's more than $105 million. The quant score by Seeking Alpha is yellow. It's a hold. The analysts haven't covered it yet. There's a lot of ETFs out there, and this is not the biggest one. So that's really why it hasn't been covered. Doesn't mean it's bad, doesn't mean it's good, but I'm just giving you the numbers here. You can make a decision, and we can have discussion after the video. Feel free to pop comments after the video. I really like this total return year to date, a little under 17%, more than 3 times the S&P 500. So you know what? Let's just go back the expense ratio is reasonable, especially if I'm getting a 7, and you're getting a dividend. So I do like that. Top holdings: Oracle, AMD, NVIDIA. Now you know what? There are over 100 holdings in this ETF, so a lot of these are on the small side. The allocation, they're all less than 2%. The highest one is Oracle, 1.99%, and then have AMD 1.74, then NVIDIA 1.7. So they are really spreading across the sector. Let's see. I like to see Micron Technology, the memory chip. Looks like there's a Chinese bank in there. That's interesting. Then Samsung Electronics. Samsung is very big in the chip world, but we don't hear a lot about it. So I would actually like to do a video on Samsung. IBM is in here. IBM, we talked about this in the first 2 videos. It's very well known for its algorithm and its model, Watson X AI. So I'm glad to see IBM is in there. Next one by Franklin Templeton. We see Franklin Templeton advertised on the business shows on cable news. And this is Franklin Exponential Data ETF. And the focus here is on big data. So XDAT is the ticker symbol. They closed at a little under $28, $27.20. Expense ratio 0.5%, pays a dividend once a year. Yield very modest, 0.12%. That's fine. Comes out to about 3 cents a share. This is a very small ETF, a little over $4 million, and volume on average 147 shares traded. It's very small, very low volume. So what is the total return? 7.5%. So it is outpacing the S&P 500. It's not crushing it, but it is outpacing it. Let's see what their holdings are. Cloudflare, Meta Platforms, Microsoft, ServiceNow, Alphabet, CrowdStrike, Palo Alto, Netflix, AppLovin, Snowflake. Well, and these basically start at 7. Looks like 7. My eyes aren't fooling me. 7.86%, then to 7.56, then it goes down below 6. These top 10 holdings just below 3%, and I don't see NVIDIA in there. That's not the focus. I would expect to see, if the focus is on big data, My question to them is, why aren't you investing in Palantir? That's my question. But anyway, it's their ETF. I don't run it, but I can invest or not invest. Um, but anyway, I do like the fact that they pay a dividend. They are outpacing the market. I probably wouldn't jump out and buy this one. But anyway, it's not bad. Next one is Buy Invesco, which we all know is the manager of QQQ and QQQM that track the NASDAQ 100. This is Invesco AI, a next gen software ETF, or IGPT. And they closed at a little under 48 and a half, expense ratio 0.58%. And they pay a dividend of 0.03%, which is about 2 cents a share. Not a huge, for Invesco. I don't know. I would expect it to be a $1 billion ETF, but it's not, because this is very niche. But it's a little under $500 million. Trades around average 22,000 shares a day. The analysts at Seeking Alpha haven't covered it. The quant score is a hold. And their focus is specifically under thematic, their focus is generative AI. And so that to me is interesting. And I love generative AI. I love to see what their holdings are. Their year to date total return 8.79%. So it's not bad. It is better than the S&P 500. Let's see. Well, they invest in NVIDIA and more than 8%. And then Meta Platforms, Alphabet, Advanced Micro Devices, Intuitive Surgical, Adobe, Qualcomm, Micron, SK Hynix, and Strategy, used to be known as MicroStrategy. Well, that's interesting. Again, I'm wondering, why don't I see Palantir here? Maybe they think that it's oversold and they're not buying it. I think that's a mistake. But that's just my own opinion. That's all I'm giving you. Opinions. All right. Next one is Fidelity. And I like Fidelity. I own one of their dividend ETFs, FDVV. I'm a new investor in that one, adding it to my SCHD, but it's another video. This one is FBOT, and it's the Fidelity Disruptive Automation ETF. And they just closed at $30 a share, expense ratio 0.50%. They pay a dividend quarterly, annual yield 0.53%, or 16 cents a share. Assets under management about 131 million, not bad. Not huge, but not bad. The analysts at Seeking Alpha are saying to sell it. The quant score is buy. Let's take a look and see what we got. Well, guess what? The total return is outpacing S&P 500, but not quite by a percentage point. And maybe that's why they think you should sell it. Top 10 holdings: Taiwan Semiconductor, NVIDIA. They have Fidelity Securities, Cash Central Fund. Okay, that's interesting. PTC Inc., Deere. Okay, so John Deere, the tractor company. Exxon Enterprises, Siemens, the German chip company. Teradyne, Uber. Aha. And then there's a Chinese tech company, Shenzhen Innovance Technology. So, I guess my question is, why don't I see, you have NVIDIA in there? Why not put more in NVIDIA? And John Deere, that's great. Are we automating tractors? I don't know. I don't know enough about this, but Seeking Alpha analysts think that you should sell it. I just looking at this, it's not bad. I think that this is fine. I like the fact that they pay a dividend. It's only $30 a share. The expense ratio is reasonable. So I would not hesitate to buy some of this. I would not rate it a sell. I'd certainly consider it a hold, maybe a buy. We'll see. Next one, another one by Fidelity, and that's Fidelity Disruptors ETF, or ticker symbol FDIF. Closed at a little more than $33.60 a share. Expense ratio, again, 0.5%. Pays a quarterly dividend, 0.42% yield, 14 cents per share dollarized. Assets under management, a little more than 96 million. Ratings are a hold. The trading volume annually is not huge. There's not a lot of people trading or selling options against this. It's 3441. Doesn't mean a lot of people don't own it, but the assets under management are, not bad for this subsector, but it's not huge. 96 million. All right. So total return, not quite more than a percentage point over the S&P 500. If I'm going to invest in a unique, specific, specialized ETF, I want more of a return. So maybe that's, the top 10 holdings are all ETFs owned by Fidelity. You can take a closer look at that. And then the next category, the last category, are mixed robotics and AI. Okay, and a lot of times, let's just check this out. They often have a tilt towards industrial holdings. So let's take a look. That should be interesting. First one by First Trust, ROBT. First Trust NASDAQ AI and Robotics ETF closed at around 48.5. Expense ratio 0.65%. Quarterly dividend, but I don't see a yield. Must be very slight. All right. Total return year to date, a little more than 9%. So it's outpacing the S&P 500. Okay. But, not quite 10%, but it's getting there. Key holdings, Upstart Holdings, AeroVironment, the drone company, Symbotic, very familiar with it, Recursion Pharmaceuticals. I actually own shares of Recursion. Ambarella, Illumina, another drug company, Synopsys, IBM. It's heartwarming to see a company like IBM. They've been around for so long and they've been kind of, described as old technology, but they're very focused on artificial intelligence, especially with some of the models they have, like Watson X. All right. Next one, ARC ETF, ARC Autonomous Technology and Robotics ETF, or ARC-Q. We all know about Kathy Wood. She is the Chief Investment Officer of ARC Investments. So we closed at a little under 88.17. Expense ratio is a little higher, 0.75%. She's very active. Her team is very active in the holding selection. Assets, 1.1 billion. A little higher volume, 182,000 shares per day. Analysts say hold. QuantScore says buy. Year-to-date total return, not bad. 13.6%, more than double the S&P 500. So it's pretty good. I would say for 0.75% expense ratio, that's what I would like to see as a minimum. Of course, their top holding is Tesla. Kathy Wood loves Tesla. Has been hyping Tesla for years. Kratos, Defense and Security Solutions. So that's a defense contractor. Teradyne, Archer Aviations, Palantir. Okay, and Palantir, while a data company and has commercial sector applications, they're very focused in the government and in the defense world. So this is a very defense-focused ETF. AeroVironment, again, popping up, Rocket Lab, Trimble, and Amazon. Next one, it's by ETC, and that's Global Robotics and Automation Index ETF. So again, a blend, okay, robotics and automation. And ROBO, closed at about 59.5. Expense ratio is on the higher end, 0.95%. Pays a dividend once a year, 0.5% dividend or distribution yield, 31 cents. It comes out to about a year. Assets under management, a little more than $1 billion. Analysts have not covered this ETF. The QuantScore is a hold. So this one, I got to tell you, the total return is less than the S&P 500, 5.74%. I'm not excited about that. Again, if I'm paying, I got to tell you, and I'm just giving my opinion, expense ratio 0.95%, I want to see a better total return. It's just not doing it. Top holdings, Symbotic, Ambarella, Novanta, Danuke, Celtic, Cardex, Rockwell Automation. So, you may not see the big names here because these are very niche These are very robotics focused. That's the thrust, that's the theme. So you're not going to necessarily see like NVIDIA or AMD here, or like a Microsoft. You're going to see those in the broader, the chip hardware ETFs or the broad-based AI ETFs. And folks, that's it. That is it. Friendly reminder, I am an affiliate partner of Seeking Alpha. So if you are interested in subscribing to a wonderful online digital investment resource, I can get you a discount. Premium or Alpha Picks, where you get 2 wonderful picks every month, or the bundle, you get a little bit of both. And you can read a little bit more about, and you can see the discounts here. And I'll just say for premium, 7-day free trial, $30 off. Alpha Picks, $50 off. The bundle, $159 off. And bundle is both. You can read a little bit more about them. You can also click on the links or the QR codes on the right, and you can check me out on different platforms on X, Instagram, and Facebook. Until our next video, have a wonderful day. God bless.